This is a demonstration of problem 1434A, preparing the statement of cash flows indirect method with non-cash transactions. So in this problem, we are going to be given Rolling Hills Inc.'s comparative balance sheet accounts as of December 31st, 2024 and 2023. I have added a column to the comparative balance sheet to show the increase or decrease from 2023 to 2024, as well as some additional columns for adjustments based on the additional information that we are given in the problem. So we have the comparative balance sheets, and we are also given Rolling Hills income statement for the year ended December 31st, 2024. The additional information that we're given is that Rolling Hills purchased land of $21,100 by financing it 100% with a long-term notes payable during 2024. Also during the year, there were no sales of land, no retirements of stock, and no treasury stock transactions. However, the company did dispose of a plant asset for no money. The cost and the accumulated depreciation of the disposed asset was $13,410, and the plant acquisition, they said, was for cash. So we need to use the additional information that we were given in the problem to adjust the amounts in the comparative balance sheet, and we'll discuss why we do those. The first item that we're going to adjust is going to be land. If you remember, the additional information stated that the land was not paid for but was acquired with a long-term note payable. So we see from the comparative balance sheet that land increased by that exact amount, $21,100. So we're going to subtract that amount, and we see that when we do that, we had no cash purchases of land. We also need to make a similar adjustment for notes payable. To subtract from notes payable the $21,100 that came from issuing a note in exchange for land. In other words, we did not get cash for this note. Now, our notes payable had decreased by $29,000. Now, if we subtract an additional $21,100 for the note payable that we used to acquire the land, that means that we actually reduce notes payable by $50,100, which we will need to use when we do the statement of cash flows, the financing activities section. Another item that we need to adjust for was the plant asset that was disposed of. The problem stated that we had a plant asset that originally cost $13,410, and we disposed of that for no money. So that means that we need to include that amount or add that amount back to the change in plant assets, because that would have been subtracted in order to be able to determine the actual purchases of plant assets for cash. And we also need to make a similar adjustment to accumulated depreciation. Since the book value of this piece of equipment was zero, we know that the accumulated depreciation was equal to the cost. So now we can see that our actual increase in accumulated depreciation was $14,400 instead of $990. We need to make one more adjustment. We need to determine the amount of dividends that Rolling Hills paid during 2024. We see that retained earnings increased by $31,800. But when we go down and we look at our income statement, we see that it actually had net income of $96,400. So that means that Rolling Hills issued some dividends, or it would have retained earnings would have increased by the same amount as net income. So when we subtract the $96,400 from the increase of $31,800, we can see that Rolling Hills paid dividends for 2024 of $64,600, and we're going to need that information when we complete the statement of cash flows, the financing activities section. So those are all of the adjustments that we need to make to the comparative balance sheet. The next thing we need to do is take a look at our income statement to see whether or not in the calculation of net income if we had any non-cash expenses or any gains on the sale of plant assets. But we noticed that we only had one non-cash expense, and that was depreciation expense, which the income statement says was $14,400, and we had actually calculated that amount after we adjusted accumulated depreciation for the disposal of the plant asset. So now we are actually ready to complete the statement of cash flows. The problem states to prepare the 2024 statement of cash flows, formatting operating activities by the indirect method, and then how will what you learned in this problem help you to evaluate an investment? So to use the indirect method, we will start out with, in the operating activities section, with net income, which the income statement gave us of $96,400. Now we are going to reconcile net income to net cash provided by operating activities by making adjustments for non-cash items from net income. So we know that when we looked at our income statement, we saw that we had depreciation expense included in the calculation of net income of $14,400. That amount would need to be added back because that is a non-cash expense. Since that was our only non-cash expense, we will now go to our current assets and current liabilities to look at the increase or decrease and determine how we need to adjust net income for those items. So our first current asset is accounts receivable. We can see that accounts receivable increased by $1,100 from 2023 to 2024. So when our accounts receivable increases, we subtract that amount from net income. Now, why is that the case? It just means that we have sales that were included in the calculation of net income that we have not collected yet. So that $1,100 would need to be subtracted to get to the amount of actual cash that has been provided. Next, we notice that our merchandise inventory has decreased from 2023 to 2024. So when current assets decrease, those amounts would be added back to net income. Now, why is that the case? The reason we would add back that amount of merchandise inventory is because not only did we include all of the merchandise inventory that we purchased this year in net income, but we also had $11,700 of merchandise inventory that would have been purchased last year. The next item that we would look at is our current liabilities. So we scroll down and we see that our accounts payable increased from 2023 to 2024. So when our accounts payable increases, we would add that amount back to net income to determine net cash provided by operating activities. So why do we add back an increase in accounts payable? Because all of our expenses that we charged this year have not all been paid for. So we included expenses in net income, but we haven't paid for $5,300 of those. So expenses are subtracted to determine net income, so we need to add back that amount. The next item is our accrued liabilities. We see that accrued liabilities decreased from 2023 to 2024. So to determine net cash provided by operating activities for accrued liabilities, that decrease needs to be subtracted. Now, why would that be subtracted? It means that all of our accrued liabilities for this year have gone through the income statement, but also we use $1,600 that we would have had in our beginning balance last year. So that amount would need to be subtracted from net income to determine the net cash provided by operating activities. First, though, we need to add up all of our reconciling items. So we just sum this number and it comes to a positive $28,700. So it's just a subtotal that we add to net income. So actually, we had net cash provided by operating activities of $125,100. Now we're going to go to the next section of the statement of cash flows, which is cash flows from investing activities. So to determine those, we look at the long-term assets. So in our long-term assets, we have land, but we notice that after we adjust for the non-cash acquisition of land using the note payable, land is actually zero. So there would not be anything recorded for the land. But when we look at our plant assets, we see that our plant assets increased by $23,600. The problem did tell us that those cash assets were paid for in cash. So that would be our only investing activities item, and for a purchase, that is going to be a use of cash. So we would subtract $23,600 for the acquisition of plant assets for cash. Since that's our only item, that would also be net cash used for investing activities. The next items are going to be cash flows from financing activities. So those items will come from our long-term liabilities and our stockholders' equity accounts. So let's look at our long-term liabilities. We only have one, which is notes payable. Now we did adjust the amount for notes payable for that note payable that we used to acquire the land. That was a non-cash item. So when we take that amount and add it to the decrease that we already had, because we're subtracting that, we see that we actually paid off $50,100 in our notes payable. So that's going to be a use of cash, the $50,100. Now we're going to scroll down and look at our stockholders' equity accounts. We notice that common stock increased by $24,400, so that's going to be a provision of cash, or a positive amount of $24,400. Now we would need to subtract in our financing activities section any payment of dividends. After adjusting retained earnings, we can see that we had $64,600 in dividends that we issued to our shareholders, and that is a use of cash. So that would be a subtraction. So overall, we had net cash used of $90,300 for financing activities when we add these amounts together. Now we need to determine our net increase in cash, which the spreadsheet did automatically. But how did we get that $11,200? We took the net cash provided by operating activities, which was positive $125,100. We subtracted the $23,600 in cash used for investing activities and the $90,300 that was used for financing activities, and the net amount then, or net increase in cash, was $11,200. And we can check that in our comparative balance sheet to see whether or not we have completed the statement of cash flows correctly so far. And yes, that does equal the increase in cash, so we are on track right now. Now we're going to add to that amount our beginning cash balance, or ending cash balance for 2023 of $15,700, so that we can reconcile our cash flows to our cash balance at the end of December 2024, which is $26,900, as we see in the comparative balance sheet. Now, we're not finished yet because we had a non-cash financing and investing activity, if you remember, the acquisition of the land by issuing the long-term notes payable. So that amount was $21,100. So we need to list that at the bottom of the statement of cash flows, and that would give us total non-cash financing and investing activities of $21,100. And then the second part of the problem asked us, how will what you learned in this problem help you evaluate an investment? So if we were looking at Rolling Hills Inc. to determine whether or not we would want to invest in this company, remember that investors are interested in future cash flows. So we can tell based on the information that was provided that Rolling Hills Inc., at least for this year, had positive cash provided by operating activities, and we can see what types of investing and financing activities they have been involved in. All of this information is valuable to investors as they make decisions about whether or not to purchase the stock of Rolling Hills Inc. or whether they might want to sell their stock. So the cash flow statement is very important. It gives the investors a lot of information that is not provided by any other of the financial statements. And that is the conclusion of the demonstration for problem 1434A.